Thank you everyone for joining back. I hope you all found the panel very interesting. Let's start with the second panel, which is on the emergence of private credit as an asset class with views from GCC-based allocators. The moderator for our panel is Pratik Sen Gupta, Director for Alternative Asset Advisory Services at Duff & Phelps Kroll Business. And our esteemed panelists today include Dr. Bhaskar Das Gupta, Associate Director, Financial Services Regulatory Authority, Abu Dhabi Global Markets, James Munes, COO and CFO, Abu Dhabi's Catalyst Partners, and Mustafa Khariba, Independent Advisor and Board Member. With this, I would request our moderator, Pratik, to kick off panel 2. Over to you, Pratik.
Thank you, Disha, and thanks panel 1 for all the insights. And thanks all the attendees for attending this session. As our previous panel noted, the ascendance of private credit as an asset class from Indian market participants. We are going to keep on that flow. And what we noted from the previous conversation is various factors that are affecting the private credit investment in India, which include dollar return expectations, transparency, and ESG compliance, investment selection, communications between the relevant partners like GPs, LPs, and the requirement of a synchronized approach on returns and hurdles. Like here we are, so just to extend that perspective, like here we are focusing on views from our UAE-based panelists who are global asset allocators and regulators who could provide us with insights on their checklist, strategies and views on India as a market, and more importantly, sound out what they expect from their counterparties across the globe as well as India. With that, I'll introduce the panelists, which includes Dr. Bhaskar Das Gupta, Associate Director of ADGM, James Muns, who is CFO and COO of Abu Dhabi Catalyst Partners, and Mustafa Khariba, who is Independent Advisor and Board Member. So, gentlemen, I would request you to share a few thoughts on our topic for the day, like emergence of private credit as an asset class and views from GCC-based allocators. As well as to introduce yourselves. I will start with Mustafa to introduce himself and provide his initial thoughts. Over to you, Mustafa.
Hi, thanks, Pratik. So my name is Mustafa Khariba. Up until recently, I was the Deputy CEO of the largest asset manager in the Middle East, which is Shura Capital. I've managed all the entire asset classes and business lines and portfolio companies of the group. And currently I'm just serving on independent advisor to the chairman and board member of several of listed and unlisted companies. So I'm glad to be here, Pratik. So
sorry.
Should I will then jump right into this, or how do you want me to do this?
Like if you could share a few thoughts on the topic, and then I'll get into others sequentially.
Right. So, private credit honestly is an asset class that no doubt has seen a lot of momentum in the recent years, and will continue to see this type of surge in demand, especially given that we are in a somewhat of a low interest era or a low interest environment, with investors always wanting to seek, attractive yields, and traditional banking and quasi-banking lending platforms or lending products are not really quenching that thirst that investors have. It's becoming more and more popular that private credit becomes a destination for those looking for those attractive yields. Now, through private credit, obviously, you've got many more aspects. Direct lending, I think, is the most popular and is becoming more and more popular amongst those that are looking to diversify their portfolio or to sort of deploy in that era. Now, given the last 14, 15 months or so, the pandemic in my view did two things. So the pandemic really put a lot of downward pressure on a lot of the investments in a lot of global markets. It triggered a sell-off in the entire global investment realm, but at the same time, it provided the opportunity for certain institutions and family offices to what I call hoard cash. And when you're hoarding a lot of the cash, then you're looking at ways of allocating that investment or allocating that cash. And I think private credit comes in very, very nicely there, where the yields are far above and beyond the traditional lending, an alternative form of finance and an alternative form of lending. So this all in all has really benefited this almost, I think, $1 trillion industry of private credit globally. So it's going to continue to see a surge, and I think it's a very, very lucrative way. When back in 2012, I introduced the first sort of private credit / mezzanine type of lending for real estate developers in Dubai. And it was an alternative form of finance for those that have certainly maxed their allocations through traditional banks or traditional financial institutions. It provided a much more direct and customized lending, if that's a proper way of doing so. And it helped them overcome their last, little bit of liquidity needed to finish the projects and so forth. So in my view, with over, 300 billion now looking to be raised globally for this type of asset class, I think we're going to be seeing a good run for private credit in the coming few years. I think we also need to not forget that there's somewhat of a direct correlation between private equity investment as well as private credit. They sort of go hand in hand, and we'll talk about this especially a little bit in specific to India, but private equity plays in private credit are two essential components. You've got partner buyouts, you've got expansion regimes, you've got growth strategies that traditional banks are not really comfortable financing, and then hence comes the private credit route.
Sure. I think that's really insightful, Mustafa, to start with, on private credit. I'll move on to James to provide his introduction and a bit of views on the topic for the day, and then I'll follow it up with introduction of Dr. Bhaskar and his initial thoughts, and then I'll go through a sequential set of questions.
Great, thank you, Pratik, and thank you for hosting us, and thank you for Duff & Phelps for the organisation of the event. James Muntz, I'm now CEO of Catalyst Partners, previously COO, CFO, but that's only been in the last few days. 20 years in asset management, mainly in alternatives, and I've sat in all the C-suite roles, raising funds, running funds, distributing funds across VC, private equity, private credit, hedge funds. Been with Catalyst Partners for 2 years since our inception. We are a ADGM-based asset manager, set up as a joint venture between Mubadala and a US-based asset manager called Falcon Edge, with the dual mandate of realizing commercial returns, but more importantly, growing the ADGM as an ecosystem and attracting fund managers and financial institutions to the ADGM to put a meaningful, sustainable presence and support them in their growth from there. From a private credit perspective, look, really interested to have this conversation. It's an asset class we're very bullish on as a business. It's an asset class that, from a personal perspective, I followed since 2008, where I was fortunate or unfortunate enough to work for a global bank and watching banks withdraw from this area and watching asset managers step in with smart structuring solutions, and clients on the demand side realizing that there was an alternative option to equity, to public debt, to raising bank financing, I suppose. We agree with Mustafa that we think it's an area that is going to grow hugely. We think clients like it. We think the yield component's very, very attractive on it. And we think that the GCC, the UAE, the wider Southeast Asia region is a really interesting place for the asset class. So very excited to get into some of the details of why we think that, and have an exciting conversation.
Over to you, Dr. Bhaskar. If you could share your thoughts, your introduction, and we'll take it from there. Thank you. I think you are on mute, Dr. Bhaskar.
I failed again. I know James is smiling away. This is the second time it has happened, but there we go. My mobile phone was buzzing away, which is a terrible thing. There we go. I stand corrected. But thank you very much to Pratik and IBCA for inviting us. And good morning to everybody. So just a little bit of a background. I've spent most of my life in London, working for investment banking, fintechs, and for my sins, the government of UK. And then I moved down to Abu Dhabi, and I'm looking after the market development side in various sectors for Abu Dhabi Global Market, which is Abu Dhabi's international financial center. I'm particularly interested in this subject because India is one of my patches. And as you would know from the press, the UAE and specifically Abu Dhabi has got an absolutely ginormous interest in India. And it's just not speaking about it, it's actually putting our money where our mouth is. As you may have heard from the public announcements about the investments that Abu Dhabi and Abu Dhabi sovereign wealth funds and other liquidity pools have invested in. So a few things. I obviously, as a regulator, look upon this from a wider perspective. And we look at it from an overall ecosystem development. Now, when you're talking about the kind of liquidity pools that are sloshing around here in Abu Dhabi, you have to realize that it's not a place for just investing locally. It's too small. So consequently, these liquidity pools go where there is demand, where there is returns, and where there is good growth potential, as Mustafa and James mentioned. So when we look at private credit, it is an absolutely vital part of the ecosystem, where we try and bring in people who are actually looking for funding, who are providing funding, who have got the fintech pieces, who've got the legal aspects, who've got the valuation aspects, the ability to exit, enter, dispute resolutions, things like that. So overall, I think this is an extremely important place. There is a huge amount of appetite, especially for India PE, and as Mustafa mentioned, even into the private credit as well as on the VC space. And the liquidity pools that are available and anchored within and around Abu Dhabi, whether you're talking about sovereign wealth funds, the banks, the institutional funds, the family offices, and in fact, even the DFIs is quite a lot. And I look forward to talking more about this in the next stage. Pratik?
Thank you, Bhaskar. I think it's good to know the first set of views from our panelists on the topic. Now, I think at this point of time, what I would request Mustafa to focus on, like the basis for, selecting private credit investments. So any strategies that he has followed, how do he assess the growth trajectory that is observed in recent years across global markets, and especially in markets like India, where the risk return perspectives could also have a focus on return on capital. So over to you, Mustafa.
Thanks, Pratik. Look, I think we'll try to focus this discussion on India since it's of particular interest. But in general, like any other asset class out there, the particular asset manager or the investor themselves must be comfortable with what they're doing. And when I say comfortable, that means all the general due diligence and all the general aspects of really looking into any investment as any other asset class. It has no difference. Now, the only difference is that, the private credit realm comes with particular caveats. So you're looking at obviously higher returns, but on the other hand, it's a higher risk type of investment. So you must keep that in mind, that you're not getting the attractive yield, but without the risk associated with it. Again, also investment, when it comes to the geographical exposure, you have to understand that every geography, every region, every even country operates differently. Businesses operate differently. The culture, the banking sector, the regulator being a very important component of this asset class also operates differently. In some regions, in particular, maybe like India, you will need a local partner who understands how to walk the streets and how to deal with local creditors as well as local companies that they're looking to invest. Now, in my perspective, I think India will emerge much stronger post this pandemic issue. Once vaccination reaches a critical mass, I think the pent-up demand will help the global recovery and will help easing of the financial conditions, and it will become a lot more a lot more attractive for investors to get in there. Look, even S&P, when they, I believe the last, I could be wrong, but the last indication was that they're cutting the growth of India down, I think to about 9%. I can't remember the figure, but it just shows you that, this pandemic has really hit the region very strongly. But nevertheless, this will be a short-term pain for hopefully, paving the way for a long-term recovery. If you look at, the aggressive, and I agree with Bhaskar, Abu Dhabi and the UAE has invested significantly in India. The ties between the two countries are definitely exceptionally historical, and I think it will continue to be the same. But if you look at the local Indian government today and what they're doing in terms of setting up a $5 trillion economy within the next 5 years or so, that in itself should show you that the opportunity coming into India for private credit as well as others is exceptionally ample. And this type of growth, in my view, will not be able to be supported by traditional lenders or traditional banking institutions and FIs. And the private credits realm and asset managers in that asset class will have to contribute. Again, your banking and the highly regulated environment of banking makes it really difficult, to sort of lend in the particular areas and niches that private credit works best in. So, in my view, I think India is geared to be a very lucrative market for private credit. There's a lot of family-owned businesses that are generally not small, but too big to tap into the local banking system. And at the same time, may not be very welcoming to private equity players that are global and that will really interfere with their businesses. So this gives the private credit managers or the private credit investor a little bit more, umph in negotiating terms and getting favorable credit facilities deployed with these family-owned offices and businesses. I mean, in general, this is where I think things are going. And if we are looking at particular industries that I think will be lucrative or will pave the way to good deployment, I think, building of data centers is going to be one. Fiber optics and fiber connectivity is going to be another. Agriculture and real estate is a strong contender, I think, and we'll see a lot of private credit play coming into, and as well as telecom. So all these, put together make it really lucrative for the India market for investors, especially in the private credit sector. Now, this is not to say that the banks will not pick up and become much more agile and much more technologically savvy and advanced in order to compete with these alternative financing modes. I mean, if you look at Zeta, for example, and Zeta, after securing a $250 million funding from SoftBank, is now looking at really rechanging or readjusting the banking system and introducing technology that will help, smoothen out the consumer experience with the bank. So it's, I think it's a very, very exciting time for that asset class, and it's an exciting time for the India market.
Sure, Mustafa. I think that's wonderful the way you brought out the facts about Indian market and its growth potential. Now, as you rightly pointed out, there is a gap in between which needs to be filled in, and that is, infusion of private credit, and maybe within the existing banking system or with innovative, allocations. Now, here, my question is to James, right? As a private credit asset allocators, what are the, checklist that you have? And more importantly, what could be your advice for Indian GPs to access funds from UAE-based fund of funds, and what would be key points that you would consider to assess any such applications?
Yeah, sure. Thank you, Pratik. So we've allocated a significant amount of capital in the last 18 months into private credit strategy. It's an area, as I said, we like. It's an area we think can really add depth to the ADGM ecosystem. We've give you an idea of some of the flavors and what we look for in those managers. We've allocated to a global distressed credit manager who previously operated out of New York and Singapore, but we're looking to run a global strategy. Needed to have a team out of the center of the world to look at both East and West. And we think distressed is very, very applicable to the UAE, to the GCC, and to India. There's going to be a lot of opportunities in that market as we go forward over the next couple of years. We've invested and seeded a GCC-focused private credit manager that did its first deal in the Press with Stars play. And again, the expertise, and as Mustafa said, having on the ground expertise, relationships to go into some of those cultural nuances to manage that side of fund, we're very, very interested in, and we want to help grow that side of business. Tech on the private credit side, we see a lot of opportunities across the GCC and again in India with tech-focused trade receivable funds, private credit funds that are taking some of the technology and engineers that are there and applying, factoring to invoice payments, whatever it may be, or trade receivable factoring is another area we're very interested in. And the last one, which we haven't invested in, but which we're getting close to, is venture debt. Again, a lot of the venture capital, venture equity funds are now seeing competition from venture debt, and some of these founders realizing that they don't perhaps need to give up as much equity as they previously did if there's a debt option on the table. Our mandate, Mustafa was talking about risk and reward, we look at risk and reward traditionally, but we also have an added layer of the risk of asset managers in particular blowing up and not having that sustainable presence in the ADGM. And we really think private credit is a really good balance of risk reward, because the returns can be 10 to 16, 17% and higher for some of the other more exotic structuring on the private credit side, which is about our sweet spot. But we think they're longer term investments. They normally have a deeper J curve to them. They're normally more patient capital that are investing in them. And that gives the asset managers a longer runway to create their presence in the ADGM, which is a huge focus for us. How do we get longevity and sustainability into the institutions that we're backing? From a what do we look at standpoint, we clearly start with returns. We clearly start with the ADGM impact. But what I would say is the most important thing for us looking at GPs coming into the region is governance, control, grown-up businesses, ultimately for the region and not just the ADGM to be seen as a serious international financial center. We need to attract international limited partners and investors into the funds and the managers that are operating out of here. And the only way we're going to do that is by having the right governance structures, the right controls in place. So when those international institutional LPs come in and do their ODD, the ODD that we've conducted stands up to that international standard. And so from the outset, when we partner with managers and we seed managers, we encourage, we absolutely rely on them having institutional quality controls, processes, governance structures in place. We bring some of that international experience to say, if you're going to be standing in front of Ontario's teachers, or as one example, in 3-4 years' time, having launched your first fund and on to fund 2, here's what you need to look like as an institutional quality fund manager. And really, that's a huge important facet for us, is getting those types of businesses operating out of the ADGM so that we can be seen as credible, grown up, and a safe haven for people to invest their capital in and through. Ultimately, for us, we will seed managers. We will provide introductions to the wider family within the UAE and within the GCC. But ultimately, over the long term, it's about attracting institutional third-party capital into those managers and helping them grow in that way. So that's some of the flavors that we look to when we're partnering with managers.
Sure. I think, James, that is really helpful. I think a few points that I'll take to Dr. Bhaskar on this is, first, you work with both the markets and, for quite a while. So you understand the Indian market as well as, the perspectives of UAE. What James brought out is, for fund placement, the role of ADGM in that entire ecosystem and the vision about it. So my question to you, like, if you could, provide more perspective on the ADGM side and that entire ecosystem that you are trying to build at this point of time.
Sure. Thank you, Pratik. And I think it's going to be a hard act to follow James and Mustafa, who've been very concrete, because as a regulator, I'm going to do a bit of a waffle. But then there we go. I'm an old git. I can waffle around. Look, I'm going to provide, as I said, a bit of a macro view on this. And as I said, I've already proven that there is a huge amount of appetite from Abu Dhabi as well as the wider region into India. So what I'm going to try and talk about it from the perspective that, Pratik, you mentioned, as to what does an Indian GP or a fund manager actually look at and what can actually work. But before I talk about what can actually work, let me talk about what doesn't work. Okay. What doesn't is suitcase banking. You just jumping on a plane, coming here and sort of, give me money and I'm going to manage a fund for you. Doesn't work. There's not an ATM, right? Number one. Number two is, if you are setting up your first fund or you're approaching this for the first time, don't think about the first fund. You actually have to start thinking long-term. You have to think about almost like establishing a presence over here. You're going to create a platform. This is where you might want to set up your feeder fund or your fund, which actually not just invests in India, but also in the Middle East, where there's a huge Indian footprint. So think about it from actually having a presence over here. Flying in, taking money, going back can work, but that's not how the relationships over here work. You have to think about it from a very long-term perspective, second fund, third fund, and not just in PC or PE, but also wider sectors as well. Your second fund should be a multiple of your first fund, and it's only once you have established the relationship and the returns and the performance that James and Mustafa mentioned, that you can actually then go back to the liquidity providers and ask for more. The second piece that I'm also want to reiterate is that whilst you are raising dollar or dirham-based funding over here, keep a very sharp eye out on the FX side. By diversification of your private credit strategies, not just in India, but elsewhere as well, it kind of protects your returns that you're going to give back to your investors. And of course, the continuing ones, the fabled unicorn, which sort of, throws out sparks of multicolored liquidity, you want repeatable ones and consistent performance. So that's the reason why the presence over here is very important. And the last thing that I'm going to bring out is that, look, this market is kind of disrupting the traditional public and the bank-provided credit market as well. But just like you got to keep one eye on the cat and one eye on the fish, the private credit market is also starting to get disrupted. And that is from very innovative business models that we are starting to see that are coming out of the fintech space. And Abu Dhabi is one of the largest fintech places in the wider region. with an appetite to invest in interesting models, to fund those interesting ways of doing private financing platforms. James mentioned about venture debt, all those things. In fact, an announcement has just gone out, and you'll be interested to see on our website about venture debt. So there's quite a lot of interesting things that are happening. I would say you need to look at establishing a relationship with the liquidity providers here in the GCC and specifically in Abu Dhabi.
Sure. I think that's really helpful for our audience on their next steps, like if they want to access UAE market. My question, I'm just taking a few pointers from you, and I think one of the key word there was disruption. So my question is to Mustafa is, as disruption is becoming the norm in markets like India through new technologies and more enablement of ideas. How do you see the investment strategies that might evolve within the private credit space, and what could be the implications of that for an emerging market like India in the near term and in the medium term?
I think the private credit itself is a strategy. So strategies within the private credit is essentially investors and managers looking at where they're going to be deploying this private credit and with whom they're going to be deploying this private credit. And like Bhaskar said, fintech and technology-based lenders and tech lending from an alternative perspective are becoming more and more popular. But I also mentioned, fintech is also helping banks, traditional banks, compete in this alternative space, which will essentially, in my view, really shrink the opportunity for the alternative lenders. Now, given all these parameters and given all these aspects, like I said earlier, about $300 billion is what is being raised today, simply to deploy in private debt, private credit. Obviously, they're not all going to Southeast Asia or India and the Middle East, but nevertheless, it just shows you the appetite that's out there for this type of product. I'm glad to see that James has allocated a lot of money over the last year and a half to private credit. I truly believe that it is a great asset class. We've done a couple of credit funds when I ran at Shah Capital, and it's produced a lot of lucrative returns and averaging about 14-15% per annum, which is a significant return for any asset class. Never mind, the alternative finance realm. But I think if you look at a global perspective, private credit is one of many strategies that must be considered. Bhaskar spoke about diversification. It's very key. You can't throw all your eggs in one basket, and you cannot focus simply on one strategy, especially given a portfolio of a decent size. So in my view, dividend plays within the global market is going to be coming back into play. It's very important. It's been a subdued market over the last year and a half for the pandemic. I think that the equities market are also looking to recover. We've seen the rise and fall, and then the rise again of the cryptocurrency market, which is sort of neck-breaking speeds of upwards and downwards trajectory. So it's gonna definitely be a bumpy ride in my view, but we'll need to jump through a lot of these hoops. But if you truly buckle down and believe in the asset class of lending or alternative financing, then private credit, I think, is the way moving forward, not only in India, but it's going to be a trend across the globe.
Sure. I think that's really helpful. And I think with that, I'll actually kind of come to James to provide, some guidance on types of alliances funds could have between UAE and India. You have mentioned ADGM, but any other, kind of alliances that could be useful, or kind of, networking that could be useful between the the GPs here and LPs there to augment private credit investments in India. And as we heard in the first panel, like we are just at the cusp of the next big, capital expansion. So please share your thoughts on that. Thanks.
Sure. So as private credit is disrupting other traditional parts of finance, my view is the relationship between GPs and LPs is fundamentally changing as well. And if you talk about alliances, in my mind, good fund managers shouldn't be looking for LPs. They should be looking for strategic partners. They should be looking to form alliances, especially in the early stages. And if you're looking for an alliance out of the UAE as an Indian-based fund manager and it's purely about capital, as Bhaskar mentioned, it's probably not the right alliance for you. It's got to be the right strategic partner and alliance to help your business grow in the way that you want your business to grow and as you envisage your business thriving. We've debated quite a lot as a team, India private equity and private credit, of should managers be domiciled here? What sort of presence should they have here? On the one hand, it's very, very close geographically. There's obviously historic ties and lots of reasons we believe are attractive to managers to be here, but it is a vast market where you need local expertise. And how do you marry those two things up? And what I've witnessed over the last 2 years, and the rest of the panelists and yourself, Pratik, might know better than I do, there is a lot of Indian families here. There's a lot of Indian wealth in the UAE. There's a lot of strategic partnerships between the countries. And we should just look to build on those foundations. So I think there are alliances to be built. There are reasons for fund managers to domicile here. You've got to work through, as you and your C-suite of your business and your advisory, what alliance am I looking for? Yes, capital is important, but it can't be the only thing. Access to the wider region, access to institutional LPs, pathways to growing your business, whether that's working capital or support from the local banks. What is it that's important to you while still retaining that local expertise? I still believe if you're going to be successful in private markets in India, you need to have those cultural nuances. You need to be on the ground. You need to form alliances locally in India as well. And therefore, what's the right construct for your business? It might seem very attractive to live in Dubai or Abu Dhabi and see some of the ecosystem that's going on in the ADGM, but don't do that to the detriment to your own business. Your strategy's got to stand up on its own 2 feet. It's got to be beneficial for you to be in this region for the right reasons, not just for capital. And we can be very, very helpful in those discussions. What are you looking to achieve as a business? What's your exit? What's your succession planning? All those are important facets that we can support with. But it's really got to be clear from the manager and from the GP what they're looking to achieve over the longer term. All of those things exist here. The family ties, the historic ties, the geographic ties, the time zone, the asset classes, some of the cycles we're going to go through. But to form those alliances, it's got to be long-term, strategic, and priorities aligning. And sometimes that takes a lot of time. It takes breaking bread. It takes things that some of COVID are restricting us to do at the moment. But I'd really encourage managers to think carefully about what do they want from not LPs, from strategic partners. Come and present now why they think that's applicable to the region here. And we can have a sensible conversation. If you're coming to look for capital, it will be a short conversation, I'd say.
I think that's really important, James, and I think a few good pointers there. But more importantly, communication is the word between the two parties that will determine the future of the alliances. And with that, I come to Dr. Bhaskar. Like as a regulator, what type of synergies you'd wish between UAE and Indian capital markets in terms of, say, policies, governance, as well as access?
So look, I mean, as I started by saying, the government-to-government relationships between UAE and Abu Dhabi with the government of India is extremely good, really good. And I can't have anything but praise for the government of India, because whenever we have gone to them and said, can you please help us bring more liquidity and investments into India, they have done that. I mean, for example, they have made reference to one of our sovereign wealth funds in the tax laws. In February, they gave us an exemption on the SEBI rules for now making the UAE as a Category 1 jurisdiction that will allow UAE funds to invest in India. We have an MOU with Gift City. We have very, very good relationships with India. And the thing that I keep on saying, we got Hindi as the third official language, and there is a big backing temple that is growing as well. So I think we are well covered from the divinity side, the language side, and of course the food is good. But broadly speaking, I'd like to just pick up on a couple of things that that both Mustafa and James mentioned. Look, as I talked about it, we are seeing quite a lot of interesting propositions that are coming through in terms of what is the future. Quite a lot of people are talking about establishing crypto funds over here. And we are fine. We are one of the biggest institutional crypto jurisdictions out there. We've already authorized 6 crypto exchanges. So if you wanted to look at it from that perspective, that is definitely there. But more substantially, just to sort of flesh out what James had talked about in terms of institutional LPs, look, India is a capital constrained place. And the demands on the local as well as some of the international capital that is coming in is huge. Somebody had talked about saying that they need $500 billion just for financing their renewables strategy over the next 3 to 5 years. Forget about the private capital side. And COVID obviously is now requiring a significant and a huge amount of additional capital to come through. So besides the availability of local capital, what James and I have been talking about and with my other partners is to actually see whether we can bring international LPs and funds together. So in 2019, we held a roundtable where we invited about 20 Indian funds and we put them in front of international as well as Abu Dhabi LPs, where we said, look, guys, talk. I think it's a question of awareness. It's a question of understanding the alliances that James was mentioning. And this year, we are hoping to do the second of these events where we will be going around to places as far away as Funds Forum, Super Return, Salt New York, and of course, Salt Abu Dhabi, as well as the Invest in India event, where our objective is to bring these LPs, these international LPs who may have perhaps not considered India as a location, to come and meet people who are based here and are able to provide good quality GP and investment opportunities, performance, and investment into India. So I think from the government perspective, it is well aligned. You have everything lined up. You have the appetite, you have the awareness, you have the welcoming availability, you have the evidence that we have done this before, and our plans are substantial. So please feel free to reach out to me, and very happy to have a chat.
Sure. I think that's actually kind of very helpful to understand that there is a lot of synchronized effort, and I think the G2G communications are on. I think the other set of communications, which is predominantly between GPs and LPs or allocators and their strategic partners, I think that will take a bit of more introspection on the Indian side to support the conversation, and definitely a point to look out to. Now, as we are kind of coming to the end of this session, I would like to have final set of thoughts from all 3 of you. So I'll start with Mustafa, and then I'll go to James and Dr. Bhaskar. Over to you, Mustafa.
You want my final thoughts on private credit or in general?
In general, private credit.
I think, look, for all the audiences here and being previously based in ADGM and work closely with His Excellency and all the guys that are running the show there. Abu Dhabi is a very good base for anybody looking to set up a fund structure that is looking to deploy assets globally. It's not only a good investment environment for local deployment, which you can do, but I think it's a very, very strong base. And I think what Abu Dhabi Catalyst is doing and what James is running now has also got a lot of potential and upward momentum, especially being associated with Mubadala and so forth. And they've done a lot of good deployment over the last few months. Now, private credit, I think I'm a strong believer in this asset class. I think it's a very important element and component of any economic growth, no matter what the environment is. But in particular, I think in India, it will play a big role in the projections and the growth that is anticipated to take place in that country. It is a vital part, I think, of helping local businesses who are looking to expand. It's a vital part of getting India exposure without really going through hoops yourself. You get the exposure, you get the decent returns, and you get somewhat of comfort that you're investing in an economy that has a demographic that is far more lucrative than any other region in the world. So both asset class and India are looking to have a bright future, and I wish everybody the best, and I'm ready to answer any questions if there are any. Thank you.
Thank you very much. James, over to you.
Mustafa. So I'll try and keep this brief. I agree with Mustafa completely. This is a wonderful asset class. It's an asset class that should continue to grow. I'm a firm believer in SMEs being the lifeblood of countries and economies. I believe those SMEs need huge amounts of support, especially at the moment in a pre-COVID world, as we see large institutions, sovereign wealth funds, corporates who take 100 days plus to settle invoices. The processes the banks have to go through to approve credit lines. There is an opportunity for innovative fund managers to provide that gap. And India is just going to be a wonderful growth story over the next 10 years, and managers that play that correctly should have great success, and we want to support that out of Abu Dhabi. The last point is really around regulation. I don't think, and Bhaskar, tell me if I'm wrong, but there's going to be some change to the regulations of private credit managers. Regulators haven't really grappled with the issue of, is this a bank? How do we regulate a fund manager that's doing private credit versus a bank? Now, a deposit-taking institution that provides credit is very different to a fund manager, but I think there's going to be some disruption in how private credit managers are regulated going forward. And so, as I mentioned from the outset, if you're a GP and you're in this space, set your business up to have good governance, good controls, good processes, so that when those regulations do come down the track, you're in a good place to embrace those rather than be problematic for your business. But look, it's an area we really like. We want to support that business. The door's open here in the ADGM, and love to have those conversations.
Okay, Bhaskar, your final thoughts.
Sure. No, I think I would reiterate the last point and riff off what James had mentioned. Look, as a regulator, we are open to this, and some of the things that we have established are two examples. One is a private financing platform where you can actually establish what I would call as a non-traditional financial institution, and that particular setup allows you to provide credit and financing to startups and to a certain extent SMEs as well. We are ourselves developing an SME platform from a regulatory perspective that is going to allow people to pitch various services to SMEs. But on a broader basis, please do note that since the credit crisis, the SME financing and the trade finance gap has grown massively. So if you did want to actually see an area where private credit can really, really grow after, is in this particular space, because the banks have moved up into the investment grade and the top pieces. And because of the huge amount of competition you're getting and the negative interest rates, everybody's piling into that segment. So if you're trying to push your private credit at the top end, you're going to face quite a lot of competition from the public credit side. But where you have a great opportunity, and which is where I'm trying to say, is, for example, on the trade finance side or on the SME financing side, where private capital is much more nimble, they have got much more capacity, their return structures are different, they can come up with innovative structures like funds, etc., etc. I think that is the key thing over the next 3, 5, 8 years is a massive growth area where competition is low, returns are high, and innovation can pay off. So quite interesting places and models coming up, and love it. This is a really exciting place.
Thank you very much. I think that's really helpful. I think if I just summarize this entire discussion in 3 lines, I think as Mustafa highlighted that India is a great opportunity, and seconded by James and Bhaskar, right? It is a great opportunity. There are multiple areas where it can attract private credit. There is a very conducive environment at a G2G level where the progress could be made very fast, and ADGM is a place where the allocators and the fund placement or fundraisers can actually meet and kind of bring in a synchronized effort, not only for today but for the future. And as James rightly pointed out, like, it will be a great future at least for the next 10 years. The only thing that is actually need to be focused on is how to address, the placement in areas like SMEs and trade financing, and also how to improve the communication side of it, maybe investor relations, maybe projections of fund placement managers on what they want to do in the short term and in the long term through their visions. And relationship is the key word to build on over the future. So with that, I think we come to the end of this conversation, and thanks to all our panelists. There is one question that I want to share with our panelists here, which says, I think that is a very specific question to James. How do you compare Indian opportunity to other jurisdictions? And then others can chip in with their thoughts.
Sure. Look, we look at risk reward, we look at local markets, practices, managers there. We are a global looking asset manager. We will look at all jurisdictions that make sense for managers to access out of the ADGM. We like frontier markets, we like emerging markets, we believe in the growth story of the region, and we look at India as having a wonderful opportunity. It's a huge market, right? There's a huge population, a huge market, and with that comes huge opportunity. So I wouldn't say we're positive India versus Pakistan or any way like that. We look strategically at what the opportunity set's there, but 2 regions that are very much on the ADGM's priority list are India and Africa more generally, and they are 2 areas that we really do want to focus on, attracting asset managers that can access those regions from Abu Dhabi. So it's a priority for us. Hopefully that answers the question.
Sure. Mustafa, any thoughts on this?
I think James summed it up quite nicely. Look, from a frontier emerging market perspective, there is no better destination from my view than India. Given that we are Abu Dhabi based, it just makes a lot more sense than anything else.
Dr. Bhaskar, any final thoughts, and also the Miyasa angle?
Sure. I think I would echo this, but as I said at the very beginning, given the kind of liquidity pools that are available over here, we have to have a global footprint, and it has to be, because it's just too big. But then, as I said, whilst the traditional sources of liquidity absorption like the US or Europe or even the OECD countries were always there, COVID has actually made people reset and rethink where is the actual growth going to come from, and in terms of economic activity. And more importantly, what you have to remember is not just the growth, but the step up in growth. Sure. If you're looking at step up, which gives you the boost over the next, well, I'm not going to say this year, but perhaps next 2 years, where is the catch up in demand that is going to come from? And that is exactly the areas where James and Mustafa said, whether that is in India, that is in Africa, because this pent up demand has to come up. So the demand and supply shock that we got is going to be resolved in India and Africa. And where is this particular demand going to be financed from? Where is the credit to actually drive this going to come from? Where is this is going to be? So that's why this barbell strategy of India being the sort of recipient of the liquidity and you raising the liquidity from here actually works very well. So the money will go where the demand is going to sort of step up over the next couple of years, and where is the long-term growth. So India is pretty good, and frontier markets are going to keep on showing.
Sure, I think that's a great answer, and I think cumulatively and definitely it kind of shows the positiveness within our panelists about India and its attractiveness as a recipient of capital, not in the short term, but also in the medium term. So with that, I think we come to the end of this panel, and thanks to all of you for attending this event, and sincere thanks to our panelists, Mustafa, James, and Dr. Bhaskar. I'll hand over this to Disha for her final comments, and thanks everyone. Thank you.
Thanks, Prateek. And a big thank you to all our esteemed panelists for your wonderful insights. Thank you to Rajat, Akriti, and the entire IVCA team for supporting us on this webinar and championing the private credit agenda with us. We hope all of you found the sessions useful, and we hope to see you at the next edition of this webinar and also some of the other webinars that we're going to be hosting through the year. So stay tuned for more updates from us. Big thanks once again for joining in. Stay safe and have a good day ahead.
Thank you.
Thank you.
Thank you, guys.
Thank you. Bye.